Good afternoon, everyone. This is Henry, and as we get into tonight's video review, I wanted to bring you a couple of ideas here for SPX. So, a little bit of selling today. I believe that this weakness is mostly attributed to the February expiration. A lot of times around those monthly OPEX days, you can see these major products tend to gravitate towards big psychological values, which of course 5,000 is a big one. If you look at Tesla, it's trying to pin 200. So that's a big part of what's going on today. And as we get into next week, you've got the long weekend, which will give you an abbreviated week next week. And I'm just looking at a way of selling some premium. Now, this is not going to be the best pricing, simply because the market has fallen today. But I wanted to share this idea with you where we could all probably agree that 5,100 is going to be great resistance. The only problem is there's no premium there, right? They're going for 15 cents, so there's really not anything to sell. But keep that strike in mind, the strike that you would like to sell, and see how far you have to go out until they're trading for about $1. So in this case, we're going to look at those that have 6 days until expiration. They're going for $1.85. And the way that I would consider structuring this, especially if we could do it on a little bit of a bid, but it's something like this. So you open the trade for a 25-cent credit, and the only way it loses money is if the SPX blows past 5,100. If the market falls, well, then you'll keep a small credit. If it meanders somewhere in between, you actually may still be okay with that as well. So if we look at this in our risk profile graph, you can see the type of structure that this has, where if the market crashes, it goes infinitely lower, well, then you'll just take in the credit received. If we rally and pin at 5,100 on expiration, that's where you have max profit. And then again, the only spot where you really start to get into trouble is if this thing is exploding through that 5,100 mark and you do nothing to manage it. But I like this for that 25-cent credit. And then if you like these ideas, then you can just take them into further expirations, right? Do one for the 22nd of Feb. If you go out and do the 23rd, it's going to bring in a bigger credit because there's more time premium in those options. So, same strategy. You can spread that through all different expirations as long as the transaction still brings in a credit. And that's one of the, I think, higher probability strategies that we'll be seeing for the next couple of weeks. So I hope it helps. You guys have a great rest of your afternoon, and I hope to see you in the rooms on Tuesday. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.